Once we get to, now this is the way I set it up. Once we get to the point where we're about 200 deltas short, I'll buy back some of those shorts that I put in there in order to lock in the profits. So, I mean, you could do it at 100 deltas. I mean, let's say, if we're short 100 deltas and the stock goes down, then you could, buy back some of the 100 shares of your stock. You could do it every 100 deltas if you want, or you could do it every 200 deltas if you want. But as long as the stock continues to move, that's the ideal, absolutely ideal situation for us here. So that's the strategy. That's the way we're going to be doing this. Hopefully the stock will continue to cooperate and move in a good manner so that we can actually lock in some of our profits here based on our short and long positions. That's it for now. Trade with confidence. Hello, tradeologists. Well, we're towards the end of the day here, and we're just taking a look at our position on AVP. Basically, what we have here is we're short 100 deltas, and if we take a look at the risk profile, we have a small profit for the day, and you know what? I'd like to lock that in. So since we're short 390 shares, and the stock has been down, let's go over to our charts here. And it looks like it's going to be closing down here. We're going to take a little bit of profit here and close 100 shares out of the 390 that we're short. That will give us about a $50 profit for the day, which will help offset the theta decay. The stock didn't move that much, but you know what? That's fine. We're just going to close that out. We bought 5 back, and we're back to delta neutral now. And we're still 290 shares short. So we locked in about $40 profit for the day, and we'll hopefully we'll see what we can do tomorrow. But the first day, basically we just treaded water. I mean, the stock really didn't move that much. It did come down here. I could have covered a little bit here. I guess in hindsight, that might have been a pretty good move. But you never know if it's going to continue lower or not. But we captured a little bit of profit today, at least to offset our theta decay, and we are back again so that we can continue to gamma trade this for tomorrow. So 40-day profit so far, and that's where we stand. We will continue to look for new candidates. I've already got a couple more on here. Let's see, I put Doug, I put EEM, which are a couple of ETFs on here for some potential candidates that we could, take a look at for gamma scalping. Let me just draw your attention to one thing here that somebody was asking me about. How would you know? Right now we're delta neutral on the position. We're short 290 shares. We have 10 contracts on the straddle. Generally, when would you know when to buy your shares back, or to sell some additional shares, or to buy shares in the stock? In other words, how would you be able to determine what the move would be intraday before you would actually have to make a purchase or a sale? Well, an easy way to do that is to go back to our probability analysis tab here and take what the current range is. Okay, the probability of touching, which is the current range, and that's 41.64 minus 31.12. That gives us 1052. And then we just take that and we divide it by the number of days that are remaining in this particular option cycle. So there's 18 days left, divided by 1052, and that gives us a 58-cent move. And basically what you can do is you can say, okay, if it moves up 58 cents, I'm going to adjust my deltas. If it moves down 58 cents, I'm going to adjust my deltas. Now, every single day you can do this. You can take a look at anticipate the probability of touching number and divide it by the number of days remaining in that August expiration cycle. If you want to, you could probably go over here to your chart and we could make a little, we could call this the intraday expected move, and we could just list it here. The current date, let's see, it's actually by day here, so it'll be 58 cents. So then what you do is you just take a look at the current stock price, and you would take a look at what the, if it goes up 58 cents, that's when you would look to either sell, bought, or buy back some shares if it's on the downside. But that's the expected intraday move based on the probability chart. As we get closer to expiration, the probability of touching between these 2 points is going to get smaller and smaller and smaller and smaller, so that the actual probability of intraday movement in that stock is going to get smaller and smaller as well. So we can say right now with some degree of probability that a 58-cent intraday move is probably normal for that stock. And that will help us determine when to buy or sell shares. So I hope that was useful for you. We're going to take a look once more at our position here. We are delta neutral, almost perfectly delta neutral, just slightly long delta here at the close of the bell. And we have our 35 calls and our 35 puts. We have 290 shares short on our in stock in our inventory. And hopefully tomorrow we'll be able to capture some additional profits. We had a small profit today of about $40 on our scalping position. But hopefully tomorrow we'll be able to do a little bit more. So stay tuned and trade with confidence.